Futures trading involves substantial risk of loss and may not be suitable for all investors.
Good morning. It's Tuesday, November 14th, about 6 a.m. Central Time. Overnight, the precious metals are mixed after yesterday's reversal higher. You have December gold unchanged at $19.50. December silver up 3 cents, $22.39. December copper unchanged at $3.66. And January platinum up 7 at $8.70. So here's the chain reaction of yesterday's trade, because if you were watching, it was a big reversal higher in a lot of the different commodities and a lot of the precious metals. It was OPEC's monthly report. It eased worries about weakening demand. The discussion was about China's recent weaker demand being just destocking, and market participants interpret this as China's demand is being understated. So other commodities that are centrally related to China start to react. We saw copper rally significantly, platinum followed, palladium followed after that. The US dollar goes negative on the day, 10-year treasury yields in 2 years ease a bit, and then the bargain hunters come in when they see silver dipping below $22. That snaps back, and the gold market follows suit. So that leads us into today. Today is a big inflection point, and I believe the rest of the week will carry a significant amount of volatility. We have CPI data coming out where most analysts' expectations are the year-over-year number at 3.3%, the core at 4.1%, and the month-over-month at 0.3%. They're going to indicate that it's flat but sticky. I only saw two third-party research firms come out with much higher projections, like 3.51%. If we get something like that, it's going to be a big rug pull on a lot of these markets. You're going to want to check the FOMC's CME's Fed Watch tool right after the number, see where that lands, because that'll give us the roadmap to what the December 13th FOMC meeting is. If we see something like that 3.5 number, you're going to see those expectations jump up probably into the 40%, maybe even 50-50 at this point. So where that leaves us on the markets and the technicals, you look at the gold market, it is bullish, but it's just barely hanging on. Remember, we shot up, we couldn't get through the 2020, we broke below 2,000, we broke below the 200-day moving average. A lot of the funds, a lot of the momentum traders switched into other commodities, chasing Bitcoin, chasing the NASDAQ, the S&P 500, which makes sense because of the recent rally, and they just want to be in there for the momentum type trade. Now, your key levels of support on the gold market is going to be 1938, which is the 50-day moving average, down to 1936. That's your trend reversal point. We close below there, market's going to go neutral trend. Now, the silver market triggered a bearish trend about 2 days ago, but it comes with a red flag, because when you see that bearish trigger occur, you want to see further selling the next session. The reality is when silver gets down from about $22 down to about $20, you start to see long-term bargain hunters come in and start to allocate towards their portfolios. Call those the dollar cost average type people. So your resistance is going to be 2281. That's the 50-day moving average. The 379 is going to be your 200-day moving average, and your support again is that 22 down to 21.95. So the outside markets, they're flat right now. They're pretty calm. I think they're holding their breath coming into this number. You've got crude oil down 13 cents, 78.13. The dollar index down 6, 105.44. Grains taking a bit of a breather after yesterday's explosive move. You look at all the precious metals are flat right now. 2-year treasuries down 1 basis point, 497, and the 10-year down 1 basis point at 462. So you got any questions, give me a call. It's going to be volatile, so be sure to tune in at that about an hour and a half from now, the 7:30 a.m. Central number, and hold your breath here. So you got any questions, give me a call, 312-858-7303. Remember, futures option trading involves risk of loss, may not be suitable to all investors. Good luck and good trading.